Good morning and welcome to the latest edition of What's Up Monday. This is Dominic Chirichiller of EMI DTN Company. It's July 9th and we're certainly headed for another week of highly volatile trading. Last week we had a little bit of a decline in oil prices, but I believe that was more of a little bit of profit taking selling than anything else in the market. I don't think nothing has really structurally changed. I wouldn't even say I don't think. It's still within the realms of where we've been for the last week. So let's get into that in detail here today. And again, if you have any questions, feel free to contact me at DTN, Dominic Chirichella, at DTN.com, and you can search our products and subscribe to this publication at www.emi.org. So with that, let's get started and find out what's been going on. There's a lot of potential market moving events this week. There's going to be certainly the normal 30-second news snippets coming out around what OPEC is producing, what Russia is doing. We have a meeting in about a week, I believe on the 16th, between President Trump and President Putin, and certainly there'll be some 30-minute snippets heading into that about oil, about increasing production. Certainly we'll be seeing some areas about Saudi Arabia. And the geopolitical risk is still evolving. Where we are in the market is basically this battle between what OPEC said they were going to increase versus or what they said they were going to increase at the meeting, which is roughly about 1 million barrels a day, give or take some, plus the commitment by Saudi Arabia to according to the king, that they're ready to meet any level of demand that's required in the marketplaces, and their surplus capacity is still around 2 million barrels a day. And on the other hand, we're looking at the losses of Iranian exports due to the sanctions, and the sanctions are going to be getting stronger and stronger as the weeks and months go on. We've had supply outages elsewhere. We lost up to 360,000 barrels a day of syncrude production out of Canada. That's going to stay down through July. In the second half of July, they are going to start up one of the units. So that should, by the time we get to August and through August, we should be maybe at 60 to 70% of capacity, and full capacity is not expected until September. So that's lingering, and that's impacting U.S. refiners as a lot of that oil works its way down into the U.S. Gulf of Mexico. In general, spare capacity around the world is declining. We've had issues in Angola. We have the ongoing situation in Venezuela with their economy continuing to deteriorate. So we see a lot more risk to less oil production rather than more oil production, in spite of the announced increases in production. The market is still more concerned about the loss of production rather than the recovery or the increase set forth at the meeting. We're going to get a lot of fundamental data this week. 3 snapshots starting tomorrow. The EIA will release their short-term energy outlooks Theo report tomorrow around noon Eastern time, followed on Wednesday morning early for OPEC's monthly oil forecast. And then Thursday, the IEA will release their oil market report early Thursday morning. So what we're going to be looking for in this report is more supply balances and the implications on inventory. Demand, we have not seen any negative demand growth or the negative elasticity of demand. Prices have kind of subsided a little bit on the gasoline side, especially here in the United States. The annual or the across the U.S. average retail gasoline price is still within a level where most consumers are not overly concerned about it. Again, though, the caution flag is flying on the demand side. So we're going to be looking closely at the supply and inventory, and in particular, we're going to look at U.S. supply and what, especially in the IEA report, and then in the OPEC and IEA report, we'll be looking closely at what they report for or project for increases in supply. The normal weekly fundamental cycle gets underway on its regular schedule, starting Tuesday night with the API data, followed Wednesday morning with the EIA data. So it's the fundamentals, it's the volatility, it's the external markets that are all still driving the direction of oil. We'll talk about all of those factors. We'll talk about the price direction and some of the spreads, and we'll look at the direction of the dollar and equities and how that implies a move in oil in the coming week or so. Last week, what we saw is oil prices decline after pretty much rising steadily since OPEC announced their increase at their meeting about 3 weeks ago. The big mover was the Brent WTI spread, again narrowing for the September is now the spot month spread. That spread is running a little over $6 a barrel, still very economical to export crudes from the United States using the where the spread is today for the Brent WTI. However, it's not nearly as much as the exceptional economics that existed a couple of weeks ago when that spread blew out to over $11 a barrel. Unrealistic level, but a level that the market was able to take advantage of. Shortly after it did blow out to 11, U.S. exports of crude oil hit a record high of 3 million barrels a day. Last week's data showed that number coming up substantially back to around the average of a little over or between 2 and 2.5 million barrels a day. So where are we this morning? Oil is slightly higher on the TI side, more noticeably higher on the Brent side. The Brent WTI spread is widening. As I said, it's a little over $6 a barrel. Refined products are firm this morning and moving higher. For those following natural gas, we're continuing to see that deteriorate a bit here in spite of the fact that we've had some pretty warm weather across most of the United States, but that's looking like that heat wave may start subsiding here in the next week or two. And the externals are starting off positively for oil, higher equities, lower dollar, and despite what's going on with the kickoff of the so-called trade war, tariffs have been implemented against China. China is retaliated with tariffs against the United States. So we'll have to see how that impacts the markets. Also, how it impacts oil, because part of the Chinese tariff on the U.S. was putting a tariff on U.S. crude oil exports to China, which is around a 300,000 barrel a day level. I don't think it's going to make a big difference. I think that oil will get re-optimized and it'll wind up someplace else with China buying oil, probably from more oil from Saudi Arabia and West Africa. So where is the chart right now? It's looking like, we hit that high. Here's the OPEC meeting down here. We did rise strongly. Now we're kind of going through a little bit of a topping pattern. Whether we'll break out to the upside here, it's still a question mark. As I mentioned, from a fundamental perspective, it's still looking like there's more downside oil production risk, meaning upside price risk, than the other side around. But we are getting a lot of fundamental data this week, fundamental projections. So we'll get a better feel as to how that is all going to transpire. And we'll look at that very closely in the next few days here. And so will the market. The spot Brent contract is also showing very similar signs of topping like the September contract. The spot Brent contract is kind of come off much more strongly off of its highs than WTI, which is the net result being, as we'll see in the next slide, the Brent WTI spread has narrowed, and now it's looking like it may be forming a bottom and starting to set up a trading range between about $5.50 a barrel and $7 a barrel. Again, depending on how those overall balances wind up on the international side, coupled with if U.S. production continues to rise strongly. I think we have to watch U.S. production, and we should get a good snapshot of that projection tomorrow in the EIA report. With the bottlenecks existing in Permian and in the Gulf Coast, we could start seeing U.S. production starting to rise much more slowly than it's been rising, and maybe even top out here for a little bit. And that will certainly have an impact on the Brent WTI spread. So more to come on that. So with that, a lot of fundamental data to watch this week. Certainly the economic data will be very interesting. We have to watch all of the tariff conversations. President Trump is in Europe this week. There'll be meetings at NATO, and that could be very interesting as he's been pushing for the other NATO partners to meet their budgets and support NATO, not just the United States supporting it financially. There's also a meeting coming up on the 16th with President Trump and Putin. And, certainly leading into that, there's going to be comments about increasing production and getting oil prices stabilized. And I'm sure there'll be many more comments with meetings transpiring between North Korea and the United States, and certainly with Iran. So another week of volatility. Keep your seatbelts fastened, and good luck trading.